praying for them broke niggas, we could've went the same route. I'm just coolin' thinking about something that I ain't bought. This shit got me money, why I change now? I miss all the simple shit, but challenges be paying out.
Alright, yes guys, welcome back to another video, and what a fucking week we have had this week. Absolutely insane. Again, another banging week. Last week, you may have not caught it. The week before, you may have not caught it. We've had week after week after week. This new model does not stop printing. We can't stop. And it's only a matter of time that you finally come to realization that what you are currently doing is not working. You turn up week on week, you continue to blow accounts, you continue with no specific model and no specific set of rules that you're here to follow. You don't even understand in price why it's moving, and you run into the same mistakes day after day after day. And you continue to tune into my video week on week, and you don't even understand why I continue to keep winning. Now in this video, I've created the exact step-by-step guide on how to follow this model with a 77% win rate, with full data from 2024, 2025, and also live data week on week executed live inside of the VIP Discord that we just never stop. Inside of this video as well, we're also going to be discussing about options and how to trade options, only discussing the basics. I'm not going to get too deep into it because the amount of money I'm making on options right now is absolutely disgusting. This video is predominantly discussing A to Z about futures and how you can capitalize to the absolute max. So whilst I sip my Nescafe Gold, let's get straight into this video, diving straight into the PowerPoint. All right, here we go. Let's get straight into it. The first slide, and when I tell you that we are number one in the whole space. I'm telling you, there is no other person on YouTube that you should be listening to apart from me. And I will say that because I have everything to back it up. We trade live every single day for the past 2.5 years, changing people's lives, improving the model year after year to get to where we're at today, with a model that is absolutely disgustingly unstoppable. And I'm showing you right now in this PowerPoint, there is 2 criterias to the model. One being higher time frame reversal criteria has a 77% win rate. I have all of the data to back it up. And the other, lower time frame intraday price action, this is the model which has a 57% win rate with an average R of 2R per trade. This has 3R, 77%, which is absolutely insane, but there's only around 50 of these positions per year. And with this model, there is hundreds of positions per year. And when you combine the two, this is where it starts to get stupid. And also we trade options as well. Now in the second slide, we don't waste any time. The full checklist to both criterias is here. For a 3R position, for us to enter into the marketplace for a 3R position, price must take the high or the low of the current day. So for example, from the midnight price, and I want you to get your notepad out for this, and I want you to take this video seriously because this is absolutely the only video that you need to watch. If you have a notepad or a whiteboard, write it down on your laptop. It doesn't matter where you put it, you need to take this knowledge in. From 00.00, the midnight price of EST New York, you mark the low and the high after that time. And if price takes the high of the day and forms the rest of the model that is in the criteria below, for example, we take the high of the day, price shifts market structure on both NQ and ES. Not just NQ, it has to be also on ES. Not a wick below a short-term low. A shift in market structure consists of a body candle closure below a previous short-term low or short-term high, whether you're looking for longs or shorts. Within the shift, in all cases, both models, you must have a gap within the shift on both assets. And with both models, you must have a breaker or a mitigation paired with the gap within that shift. Okay, and we're going to go through this literally in 30 seconds on a trade example that I took this week and also last week and the week before, and we never stop. Within the time of 9:30 AM EST and 2 PM EST. And of course you're going to run a valid stop placement. Who isn't going to run a valid stop placement? What is the definition of a valid stop? You may not know. Milo, do you just run it at the fair value gap low that you enter from? No. So, for example, if you're entering, and write this down as well, if you're entering into a long position, you want to run your stop placement below all bullish PD rays that will send that trade in favor. Milo, what sends that trade in favor? The fair value gap, the breaker block, the mitigation block. the order block, anything that will send that trade in favor, anything that is classed as a bullish PD ray along those lines, your stop placement must be below. And if it's below, it doesn't have to be at the short-term low. As long as it's below those bullish PD rays, that is classed as a valid stop placement. And for a 2-hour trade, there is actually one more confluence that you need to have. Price can take any 1 minute or above high or low. It can take a 1 minute high, a 1 minute low, a 5 minute low, a 5 minute high. It can take any high or low and form the model through the day. No bias, no macro, within the same time period. Now what I want you to understand is that when this model forms, the only difference between this and this is that with the 2-hour position, if we take, let's say for example, a 1 minute high or a 1 minute low, it could be a 5, it could be a 15, but we're just not at the high or low of the day. When that model forms, it is absolutely essential that price is trading out of a supporting 5 or 15 minute fair value gap. For example, if price takes a 1 minute low and shift structure, it has a gap within the shift on both assets, a breaker / mitigation block paired with the gap on either NQ or ES. So the model's formed. When we took that 1 minute low, price must have traded out of a 5 or a 15 minute bullish gap, because obviously you're looking for longs. It's a bullish shift in structure. It must be trading out of a 5 or 15. And we're going to show examples of it right now. So let's get straight into it. Okay, so here I'm showing you a trade I took last week. This is the last trade that I took of the week on futures. On Friday, I made money on options. I made 13k on options. I'll put it up on the screen. I also put my execution on my live account and also the profit that I made from this trade up on the screen as well. This is an example of a 2-hour position. Now, why is this trade valid? Okay, because Milo, we're in a huge premium. Surely you don't want a long in a premium. This is the model and it's valid. No questions asked. Okay, never question the model. When it's in front of you, you take it. If you take something that's not the model, you're unprofitable. Price takes a 1 minute low. So the most recent sweep is a small partial of sell stops. So you can label on price SS, sell stops. Okay, and if it's buy stops, it'll be BS. Okay, it's bullshit. Same for ES. We don't need to take a low on both assets. Obviously, we've taken a low, that's fine. Now, the model's formed, but for this to be valid, we must be trading out of a 5 or 15 on specifically NQ. It does not matter, and you want to write this down as well, it does not matter if ES is trading out of a 5 or 15. If NQ is not trading out of a 5 or 15 to support the position, it's not valid. Doesn't matter what ES is doing. We only look at ES for a shift and a gap on both facets. That's it. You can see here, price on the NASDAQ, as you can see, rebalanced the 5 minute bullish gap. It took the low on the 1 minute time frame, trades out of the 5 minute bullish gap. So it is a continuation for longs. Okay, so we're trading out of a 5 minute bullish gap. We've taken a low. Does not have to be major sell side. We then shift higher in market structure above the previous short-term high on NQ. And then on ES, we must have a shift as well. Okay, that's our criteria. And within the shift, we must have what? A gap on both NQ and ES within the shift. There is a gap on NQ and there is a gap on ES. Now, finally, to top it off, we must have a inverse bearish order block. The order block must be opposite to the trade. We're looking for longs. It must be a bearish order block that gets inversed. We're looking for shorts. It must be a bullish order block that gets inversed. Okay? Because that's always going to form into a mitigation block or a breaker block. In this case, we have a bearish order block. After the bearish order block, which is this up close candle that got engulfed by the down close. This green candle is a bearish order block. Now, we form this bearish order block, which is a bearish confluence for price to draw lower, okay? Which price did trade into it, and it did draw lower. It traded into the 5 minute bullish gap. It took sell stops, so it took this short-term low for price, right? And then it just inversed the order block. So because it formed the order block and took the low and then inversed it, it's a breaker block. Now, what if it didn't take the low and it just inversed the order block straight away? Then it would be a mitigation block, okay? And this breaker block, you can see, which is the inverse order block, it overlaps the fair value gap, okay? So it's paired with the gap. What is this gap? Well, it's a single candle formation that not only did it form a gap on this candle, but it also caused a displacement. A candle that causes a displacement, a shift in market structure, and forms a gap at the same time is a BAG. A breakaway gap, which is a high probability fair value gap. And when that's paired with a breaker block, that is the most high probability fair value gap that you can get. Not in all cases, but when the model's valid, that's the most high probability gap that you can get. So without questioning anything else, the model's formed. You're looking for an entry from the first gap or order block that's formed. We take entries off both a fair value gap or an order block. You're looking for longs. We don't have a bullish order block to enter from here. The first entry point is only the gap. Price trades to the gap. As soon as it taps the fair value gap, you are in. Your stop placement is going to be at the low, so below all bullish PD rays that send the trade in favor. What sends this trade in favor, you may ask? Well, we have a breakaway gap. Okay, so the gap we entered from, stop's got to be below that. We have also a breaker block. Okay, your stop's going to have to be below that. We have a bullish order block. Down close candle completely engulfed by this up close candle. That's an order block. So these are all the bullish PD rays that price can be sent in favor for your position. So my stops at the low in this case is below all the PD rays that send this trade in favor. And for this position, we haven't taken the low of the day. We haven't taken the high of the day. So very simply, we're just looking for 2R. We're not targeting buy side. We're not targeting unfilled imbalances. Hence that may be the draw. We're just looking for 2R. Okay? So our TP is going to be at 2R. That is obviously our entry. So I'm just going to take it with a random position size. This is just backtesting, okay? We're not here to calculate position sizes. We're here for explanation. So you, from watching this video, completely understand the concept of entering a position as you get into next week and you don't fuck up. And if you're not confident and you want to learn more and you want to see me execute live every day and you want to ask me a question instead of watching the YouTube video, which you can, you have the option to. The link is in the description of the video. You can come and watch me trade live with countless other members in a community full of winners that you can network and speak with other members who have already achieved what you dream to achieve. Not just me. On a 2R trade, you're going to mark 1R of profit. And Milo, why do you mark 1R of profit? Well, we do not trail our stops in 95% of cases until price hits 1R of profit. And when it does, on a 2R trade it hits 1R of profit, we trail aggressively to the low of where the last aggressive move started. Let's fast forward price. Okay, so we're not trailing stops just yet. Right, price hits 1R of profit. I'm moving my stops to the low of where the last aggressive move started, which in this case is actually going to be just above break even because price filled you into this gap. Okay, so your entry will be off the gap. Obviously on backtesting it's slightly above and it's an incorrect fill. So now we fast forward price. This next candle is extremely aggressive. We're trading to a 1.8R of profit on this position. So you're already up $750 and your stops are only at break even. So I will become more aggressive as price hits past 75% of the trade completion. When I took this trade live, I trailed to the low of where this bullish gap started. What is this bullish gap again? It is a breakaway gap, as you can see. Price displaced above this high, creating a gap. So I ran my stops at the low of this breakaway gap. And the next candle, again, which you'll see, traded aggressively higher again. And at this price point, I think specifically on this candle, I hit TP, which it doesn't matter. When I seen this candle aggressively trade again to 1.95, almost 2R of profit, this is where I became slightly more aggressive, moved my stop to the low of the body of this gap that was created. And if we fast forward price again, there you go. So you hit 2R of profit, and that trade was on Thursday. Okay, very easy stuff. I'm now going to show you an example of a 3R trade that I personally took as well. Let's get straight into it. Okay, so let's help you understand this. This is an example of a 3R trade that I personally took myself. If we go on to the 15-minute time frame, and on trading view, make sure you have this turned on. You want to click this button here on your trading view. Make sure you obviously have NQ and ES on both sides. But when you change time frame on NQ, you don't want to change on NQ and then have to change on ES as well. Make sure you turn on interval if you do not have that already turned on. So when I switch time frames, you see that both assets now switch as soon as I change the time frame on NQ, or obviously on ES as well, the interval, they change the same. Okay, so it saves a lot of time. I see a lot of people don't even have that on. Very essential. If we go on to the 15-minute time frame, where are we currently at for price? We're at the high of the day. So at the midnight price, so if we go to 00, okay, which is right here, as you can see, this is midnight. We are at the high of the day. You do not need to be trading out of a 5 or a 15. It doesn't even matter that price has not taken this price point. We're already in a huge premium. We're relatively already at the high of the day. It doesn't matter that we haven't specifically taken this high right here. We are in the predicament of the high of the day. Buy side has already been swept. Okay, we accumulated for price very slightly. We traded and took accumulation high, as you can see here, and we're at the high of the day. we simply have a shift in market structure on NQ below the previous short-term low, and also on ES, the first short-term low, a shift on ES. Now within the shift, what do we have? We have a gap on NQ and we have a gap on ES. So if we mark this out, and finally with the gap on NQ and the gap on ES, what do we have paired with the gap? We must have a mitigation or a breaker block to be paired with the gap. Now if I look on NQ, we have this bullish order block. Obviously we're looking for shorts. Down close candle got engulfed by this up close candle. So this bullish order block got inversed by this candle and it did not take the high. So it just inversed the order block straight away. And that's what we spoke about on the previous trade. So this is going to be what? A mitigation block. It's overlapping and paired with the gap. And this candle is what? So what is this gap again? What is this? This candle displaced below the low and it created a gap within that same candle. Yet again, it's another breakaway gap. Okay, and it's paired with the mitigation block. So the model's formed. We are simply going to look for an entry off the gap, stop placement at the short-term high in this case. Now, what are the PD arrays that will send this trade in favor? Well, it's going to be the breakaway gap, the mitigation block, and we also have a bearish order block here too. So my stop placement is at the high in this case. It's above everything that will send this trade in favor. If it goes towards the high, that's it. You get stopped out of the trade. And we're simply looking for a 3R position. Now, how do we manage? And you can see it's already given an entry here at 11.59. I went short. Now, how do we manage a 3R trade? Well, very simply, this is all you have to do. The same as a 2R trade, we mark 1 hour of profit. The only difference is that we also now mark 2R of profit as well. And then finally, you have your TP set. So we'll go short off this gap. Our stop placement will be at the high, and our TP, we're aiming for 3R. So our TP is there. And you can label it. I personally like to label what this is instead of just leaving a white line on my screen. Okay. And now your only job is to let the trade play out. Okay. No other considerations. It doesn't matter what price does. I wait for 1 hour of profit. We've hit 1 hour of profit, as you can see. So I'm going to be trailing my stops differently to 2R. On a 3R trade, when it hits 1 hour of profit, the rule is that you trail as non-aggressively as possible, preferably around 50%. So what I did in this case, I'm currently running a 20-point stop. So I want to move it relatively to around 10 to 12 points of what makes sense in this trade. So what I did, I didn't put it to the short-term high because that's also going to be really aggressive. I moved my stops just above this breakaway gap. So if price did want to revisit this gap or even take the short-term high again, it has that opportunity without taking me out. And now we've reduced risk, as you can see, by just over 50%. Now the decision was for this position, if this creates a breakaway gap, okay, then I'd move my stops then to the short-term high, which you'll see in a slight second. There you go, we have this breakaway gap. So I made the decision that price should not trade above this bearish order block, which we have here, or this breakaway gap. So I moved my stops to the short-term high. So I went from risking 500 to now only risking around $150 on this trade. So it's fast forward price. Okay, price trades back up into the bearish order block, which I'll label it for you so you can clearly see. We have this up close candle engulfed by the down close. So it trades up into bearish PD raise to rebalance just that small move lower. And our stop is above that. Okay, we trade out the bearish order block. This is a bullish order block. So down close got engulfed ever so slightly by this up close candle. And you see how it's been disrespected straight away. So that is a bearish PD ray, right? It is another mitigation block. So we fast forward price. Okay, the mitigation block is now paired with another gap. Okay, so yet again, it's another PD ray for this position. So I took this as an opportunity, not to add to my position. We never do that. I use it as an opportunity to take some more risk off the table. Okay, so I move my stops now to the high of this bearish order block because we have this order block here and this gap to be respected. So we do not have to be as lenient on our stop placement now, and we can take more risk off the table. Now I'm only risking around $50 on this position, so I'm relatively already break even. You see how price trades literally to the tick inside of the mitigation block and the gap, and it trades lower. Boom. As soon as price took this low, as you can see, we're relatively almost at 2 hour of profit. This is when I trail my stops to break even. Okay, and then we fast forward price, we then hit 2 hour of profit. I became more aggressive with trailing stops ever so slightly, trailing to the high, which is 2 short-term highs behind. Okay, still fast forward price, let price play out, trades back into what? A bearish PD ray, so the gap, and also the bearish order block. continues to respect bearish PD rays algorithmically, and boom. As this candle traded aggressively below this low, I then trailed to this previous short-term high, and then as price came very close towards our TP, already floating 2.5, 2.7 R of profit, I then trailed aggressively to the same candle high, at least securing 1.7 R of profit at a minimum at that price point, okay? And that is a 3R trade example. And now I want to show you, to finish off this video, a couple more slides. So let's get straight into it. And the specific results from this model is right here in front of you. 2025 alone, just risking only $300 per trade. It doesn't matter whether you've done it on a 50k funded account, a live account, a 1k live account. It really doesn't matter. $300 risk per trade produced $30,129 throughout the course of 2025 alone. And you can backtest this yourself. What I tell you in this video, I don't want you to just say, oh, Milo, you're right. Milo, you know what you're talking about. Oh, Milo, it's easy for you. You've been trading for years. I want you yourself to open a TradeZeller backtesting window or forward test it live and see it for yourself. And you're going to come back to this video. And I do not want people to say in the comments, Milo, thank you this, thank you that. It's much appreciated when we get lovely comments like that. But all I want is nothing but just a like on the video, because then I know I've done a banger. And the amount of people that come back to me and I've completely changed the direction of their whole life. From putting a video out on YouTube, for once I was completely directionless. I didn't have a model. I didn't even know what it was like to have a model. I was being misleaded by ICT traders left, right and center, going on tangents about turtle soup, dog suit, rat's ass model. There was new models coming out left, right and center. I didn't know who to listen to, and I only listened to ICT. I figured everything out myself, year on year on year on year, and I refined, improved, innovated the model to where I'm at today. And what I'm presenting to you here will change your life. I'm dead serious. This is all you need, and I do not want you to fuck this up. I'm dead serious. This is the only model that you need to succeed. You do not need to look no further. With an average win rate of 56.25%, with your average R of 2.45 R over the course of the whole year, and this is combined with all the 3R trades and all the 2R trades combined in 2025. And you can look at 2024, it does the same. 2023, it does the same. 2026, week after week after week after week, I've been doing it live. It does not stop. And yes, we do have losing periods. You can see we take losses, 38 red days, 63 green days. 62.4% of the days that you engage with price, you're going to close in the green. Year on year, it does vary slightly. It can be a higher percentage or slightly lower percentage. Okay, month to month it massively varies. We have huge months, 20R months, 25R months. We have a month through the year where we're closed the month and it will be -3 or 4R on the month, and then the next month, boom, 20R. If you're risking only $1,000 on a live account, 20R is $20,000. You don't understand how disgusting this is. How can you apply this to prop firms? Apex now offer a bundle of 5 accounts, and you want to do it with the no activation fee module if you're looking to pass it the first time. Or you can select the other option, which is $98 for 5 evals, and you pay the activation fee later, which I advise to be the best plan. $98 you pay, you can have 5 accounts, and you look to pass them the same day. It has no consistency on valuation. There is no absolute reason why you should be trading that account for weeks and weeks and weeks. They are there specifically to pass them the same day, not to trade them up to a 3k profit normally. When you trade an account up to a 3k profit normally, that must be profit that is withdrawn to your bank. You should not be trading a no consistency eval, which I will pass within the same day, and then I will take the same trades as you to get to that 3k profit, and you're just getting funded and I'm taking a payout. Okay, that is the difference. I paid only $200 at max per account that I got. I may have blown it the first time, I may blow it the second time. I pass on the third time. I've spent around $150 to $200 on average per account that I got, and my payout was $1,000. But you traded the whole month to just get funded. I traded the whole month to get paid $1,000. I blew a couple times. I paid $150, $200. I'm up 800 over 20 accounts, and you're not. That's the difference, and you can see it here. And this is how you can scale up with Apex. And inside of the Discord, we have the full plans on how you can scale up from the start to the finish on both live accounts, prop firm accounts. We trade live every single day. Everything you need is there. Taxes, setting up businesses, visas, you name it. I mean, it's there. Absolutely everything. And this is what we just discussed. No consistency rule on eval, full port it, not max size, around 2 to 3 minis works best, and you take it on a draw. Not the New York Open, you wait for a clean draw, and you'll see a clean draw, and when you see it, you take it. 2 minis, 3 minis, if the draw is correct and you got it right, boom. And I call the draw every single day, so people can pass accounts for free. And I hit 80 to 90% of the draws every single time. and I trade options specifically based off the draw and where price is going to draw to. And we've just broke the winning streak on options. We was 15 out of 15 in a row. Unstoppable. And I had one losing option trade. And then on Friday, I made it all back 1.5 times more. I just had one losing day on options. One day. I lost only 50 to 60% of the contract value. And then on Friday, boom. Huge. Absolute huge puts on Friday towards London lows. We do it all. How to manage a live account. No one talks about it. I'm the only one who can talk about it because no one else really does it. They may trade on a few prop firms, they trade on a 50k account and then they blow it. They have no right to speak about or educate on social media. The quickest way to scale a live account is to risk 4% of the peak account balance, okay? You don't just risk 4% of, let's say, for example, a 10k account. So you're risking $400 per trade, okay? You don't just risk 400 and keep risking 400. If your 10k account makes a new equity high of say 10.5, 11k, 15k, you're now risking always 4% of the peak equity high in that account. So whether that's 600, 700, and your account is going to compound with this model so fast, by the end of the year, you don't even know how you got to that situation that you're in. You don't even know how you've scaled in that fast. You don't even know how it's even possible that you've managed to almost flip a live account 3-4x within the space of a year. Now, risking 4%, I want you to be aware of that. There will be cases year on year that you will be in a drawdown, and the drawdown's going to be big. I was in a drawdown this year and I was down on my live account 35%, and it is something to stomach. Even this deep into the business now, money is money, but when you're down 35 to 40% and you have no choice but to continue, and the next month I recovered completely, I'm in a profit. That's the difference. You have to be able to stomach. If you're going to risk 4%, just remember you are going to enter a period and it's a matter of time that you are going to be down 35 to 40% on your account. It will happen. If you continue year after year after year, it will happen. But the opposite happens too. So you will be up 40, 50% within 1 month. So if you want to be conservative, then you can risk 1 or 2%. But if you're actually here to make money and you're here to grow as fast as possible, and risking 4% actually provides no risk at all, because you would have to lose almost 20R to completely lose the account, which is relatively impossible, and it's never happened ever. Now obviously there is the slimmest chance of possibility that it could happen, but it's extremely slim and it just does not happen. It's impossible. It's relatively impossible. And that is how you manage a live account. There is no halving size. There is no other rules. You risk 4% of the account balance and you trade the model. There's nothing else that goes into it. I recommend you use TradeSyncer and run the live account in the background. So you have your prop firm account, you execute on that, and then your live account is in the background on a ratio of say 2-3x more risk. So let's say you risk 500 on a 50k Apex account and you want to risk 2k on your live account. Then on TradeSyncer, you just run it as a 4x ratio. That's it. Very easy to work with. And for a live account, you can either use interactive brokers or you can use Tradeovate. I personally use Tradeovate for futures, and I also have interactive brokers for options, which I move my whole crypto portfolio, and right now it is actually classed as my whole life savings is in my options account. I don't give a fuck. I'm so confident in my model. I know exactly what I do in this business. And I've been in this business for a very long time. And yes, I have 3 apartments in Dubai and I have other investments, but for me personally, it makes no absolute sense to keep money outside of the market because I can grow it substantially. And guys, it has been a longer style of video, and if you've watched the end, and I do appreciate you staying around to the end, and I hope you've taken notes from this video. So much value inside of one video is absolutely insane. And guys, that's pretty much it. That brings us towards the end of the video. It has been a longer style of video today. If you enjoyed this video and you took some notes away from it, make sure you drop a like, subscribe to the channel. And tomorrow, Monday, this week, we're going to be live again, and we're going to do it again and again and again. I will see you inside the VIP Discord trading live. The link is in the description, and I'll speak to you guys shortly. Take it easy.